Just when you thought it was safe to go back to the grocery store, inflation is back for another pound of flesh. New inflation numbers came out yesterday, and they were ugly. On an annualized basis, the CPI was up 5.4% in February. That's up from 3.7 annualized in January, 2.8 in December, 1.9 in November, and just 0.9 annualized in October. Spot the pattern. That puts annualized inflation just below where it was in March of 2021 when it really started taking off, ultimately hitting an annualized 16% by mid-22. Ominously, the New York Fed separately reported that consumer inflation expectations also jumped last month, something they hadn't done in 2 years, but something they did do at the outset of the 21 inflation. The latest numbers put the body count at 19% inflation, that's official inflation, since Bidenomics was unleashed upon the American people. Of course, the media is downplaying all this, running with the year-on-year numbers, which don't look nearly so bad at 3.2. Yes, that's almost double the Fed's sacred target, but it is not 5.4. In fact, Wall Street Journal this very moment titles their inflation article as, quote, slightly hotter than expected. Of course, the only reason it's so low as 3.2 is because the year-ago numbers were driven by oil coming down as the world routed around the Ukraine war, and above all by the China crash, which tanked demand for oil, China is the world's biggest importer, and also crashed consumer goods prices as Chinese dumped unsold manufacturing output. It's worth noting media also did this when inflation took off in 2021, emphasizing year-on-year numbers to take the sting out of the bad data, just long enough to cover the transitory inflation gaslight that we all remember. It's almost like they say what they're told to. So what's driving the resurgence in inflation? In short, food and housing. Food was up an annualized 6% on the month. Of course, it's worse if you include shrinking products and crappier ingredients, crapflation. Shelter, meaning housing and rent, is up 6% on the year. Car insurance is up over 20%. Airfares took off, up by a third in the past 2 months on an annualized basis, for which you get a plane that the wheels fall off. The one bright spot was goods deflation as Chinese overproduction continues flooding in. I mentioned this the other day as short-term helpful on inflation, but of course at the cost of our remaining domestic manufacturers. So what's next? Brought to you by Unchained.com. I've worried in recent videos that we're repeating the 1970s catastrophe when government spending drove inflation and then the Fed tried to fix it by strangling the real economy with high rates. What happened in the 70s, aside from Captain Tennille, is the spending never came down, meaning after a temporary pause in inflation, transitory pause you might say, it came roaring back bigger than ever. That inflation ran more than 5 years and only ended with rate hikes so savage, nearly 20%, that they crashed us into a pair of severe recessions with 10% unemployment that, of course, cost Jimmy Carter his job. The problem is if we do get a repeat of the 70s, I don't think Washington will be willing to fix it this time, specifically because it cost Jimmy Carter his job. So they're dumb, but they're not that dumb. So rather than take one for the good of the country, modern Washington may well let inflation run, massaging the statistics and gaslighting with media to ignore the pain as long as possible, which would mean years of stagflation culminating in a horrific purge that could make the 70s look like a garden party. Okay, we'll be watching. See you next time.